What's going on, guys, and welcome back to another very exciting video. In this video, we're going to be taking a look at Ally Financial. And Ally Financial is a company that I've only talked about once before on the channel, but it has a lot of interesting things going on with it. One of those being that Warren Buffett himself actually owns a fairly large stake in the company. So what we're going to do in this video is we're going to take a look at the metrics behind the business and why all those metrics have led to Warren Buffett thinking this is a good investment. At the very end of the video, we will go over a price target based off historical PE ratios and PE ratios of other banking companies in the market. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at their chart. We can see here today, 1% move up over the last 5 days, more of the same. If we look at the last month, we see that the stock has traded down over 15%. And again, this basically has to do with everything that's gone on with the banking sector. A lot of these banking companies have been hit in a major way, and it kind of presents an interesting potential buying opportunity. But if we look at the last 6 months, they are down around 13%. And over the last year, they are down 41%, which is absolutely a huge move down. If we look at the last 5 years, we see a lot of volatility. Again, back in 2020, they were hit especially hard. But since then, they went up almost in a straight line to a high of around $55. But since then, they have traded down over 50%. And if we look at their max chart, we can actually see that since 2014, when they IPO'd, they have basically traded sideways. One thing to keep in mind over that time frame is that they have paid a dividend, and we could see in 2016 they started their dividend off at around 8 cents and slowly have actually worked it all the way up to 30 cents. Right now they are sitting at a dividend yield of around 4.7%. Normally when I see a company that has a dividend yield of over 4%, I start to get worried because there aren't many companies that can sustain a yield like that for very long. But when we look at Ally Financial's payout ratio, we actually see that it is sitting at a 23.81, which leaves plenty of room for growth in the future of their dividend. A strong dividend yield is something that Warren Buffett looks for in a lot of his companies. And we can see here, Ally Financial, he is holding around 30 million shares, and that is a 9.9% stake in the company. And what you need to keep in mind is that at 10%, you have to make special filings with the SEC. So oftentimes Warren Buffett will try and stay below that 10% mark. We can see there are exceptions to that here with American Express, where he owns 20% of the company, but oftentimes he tries to keep it below that 10% mark. And again, that just makes his life easier in terms of the amount of filings that he has to do with the SEC. So what you could see is Warren Buffett may actually end up selling out of a small portion of his Ally Financial shares if they were to buy back a significant amount of outstanding shares that would cause his ownership to go over 10%. Another thing we know Warren Buffett looks for in a company is a company that is trading below its intrinsic value. And one of the metrics to look at is forward PE ratio. So for forward PE ratio for Ally, we see that it's currently trading at a 6.06. And if we just go a few months back, we see that it traded all the way down to a 3.79 forward PE ratio. And compared to the broader market of around a 20 forward PE ratio, we can see that Ally is trading at a deep discount. And if we look historically at the last 5 years, we can see that it's traded around a 5 forward PE ratio for a fairly decent amount of the time, but it's also traded all the way up to around 11 to 12 forward PE ratio. We can compare that to a Bank of America, where Bank of America over the last 5 years has traded anywhere from a 8 forward PE ratio all the way up to around a 16 forward PE ratio. And if we compare that to a JP Morgan Chase, we can see that they've traded anywhere from an 8 forward PE ratio all the way up to around a 13 to 14 forward PE ratio. Before we come up with a potential price target, we need to see where their EPS is projected to go over the next year. So we can see that there are 19 analysts covering the stock. They have an average EPS for 2023 of $3.76. They have a low number of $3.14 and a high number of $4.04. We can use those earnings numbers to come up with potential forward PE ratios. We can see that the current stock price is sitting around $25.49, and based off the average estimate of $3.76, we have a forward PE ratio of 6.78. If we hit the low estimate of $3.14, we have a PE ratio of 8.12, and if we hit the high estimate of $4.04, we have a PE ratio of 6.31. So what we can do is we can use the current PE ratio based off the average earnings estimate for this year, and that is 6.78, and we can compare that to potential forward PE ratios of a 10 to 15. And I believe that a 10 to 15, based off what we see from Bank of America and JP Morgan Chase, is a fair valuation under good market conditions. And based off a 10 potential forward PE ratio, we can see a potential price target of $37.60, which is almost a 50% move up from the current price. Or if we value value it at 15, we can see that the price target would be $56.40, which would be a 120% move up from the current stock price. If we look at the low estimate for earnings, we have an 8.12 forward P ratio. And again, if we compare that to a 10 to 15, we would see a price target anywhere from $31.40 all the way up to $47.10. And that would be a return of anywhere from 23% all the way up to 85%. And then at the high earnings estimate for 2023, we had a 6.31 forward P ratio. Again, comparing that to a 10 to a 15 P ratio, we would actually get a price target of $40.40 to $60.60, which would be anywhere from almost a 60% return all the way up to almost 140% return. With that said, I think the valuation metric is the hardest one to hit. A 10 to a 15 is under ideal situations. We could see a lot of these banking companies trade anywhere in that range, but oftentimes they'll trade sub 10. So I think it is difficult for, even an Ally to get up to that valuation. The market just doesn't value banks really in that range. But I do think there are times in history where we can see it get into that range, like we saw with JP Morgan, like we saw with Bank of America. And at that time, it may be a good opportunity to actually sell out of a banking company and basically take a quick profit on it. I don't often talk about quick profits because I think that long-term holding Ally, what you're going to get from it is a consistent dividend flow of around 4.5%, which is absolutely amazing. That is a great return. And right now they're trading basically at their IPO price. So I have not bought into Ally Bank, but I think that it is a potential one for me to look into and get a small position going with it, especially again with a dividend that's going to pay you consistently over time. Like we can see here on this chart, they just pay out their dividends consistently and you get to collect around a 5% yield every year. So keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into these companies before you invest into them. But I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.